Greetings, members, one and all of the Salivation Nation. Gold's outlook for 2022. Let's explore. Gold has not performed as well as many of us thought it would in 2021. I made a prediction that gold would be up over $200 more than what it is right now. However, there's a lot to be thankful for in terms of gold's price and performance, even considering what's been going on in terms of inflation and other things and other factors that one would come to the conclusion that gold should have reacted much stronger than it has. So let's talk about it. I'm going to be referencing an article here from Forbes magazine, The Gold Puzzle Explained. Talks a little bit about this. It ignores some factors, and we'll discuss that in spite of the article's omission of this information. Inflation has been high for some time now, so gold should go up. And by some time, I'm talking about especially this year, when we've started to see it go up over 5%. In fact, when we started to see the Fed basically target 2.5% months and months ago, we knew that was the beginning. And we knew it wasn't transitory despite what we were told by the media and by the central bank. It didn't. In fact, gold went down. It's been a horrible preserver of wealth if you measure it just over the course of this year. Silver even worse. Tapering, followed by tightening, is firmly on the cards now that the Fed has spoken on December the 15th, 2021. So gold should go down. It's gone up. So what's going on? The article asks, and it is kind of crazy that it's gone down or it's gone up, and it's kind of pulled back a little bit as of the recording of this video. Taper and rising interest rates are not bullish for gold. And inflation can't be bearish unless we have entered a parallel universe where the rules are backwards. However, they are backwards, and as Sherlock Holmes said, when you have eliminated the impossible, whatever remains, however improbable, must be the truth. So discounting the possibility that we have landed in bizarro world, what could be the cause? Well, we can theorize a couple of different things according to the article, and that is the market looks out 1 year, and the price today reflects the status of affairs as the best guess of the aggregate of the market in 12 months. What does recent actions say about this vision? It says we are going to get a deflationary recession. How could this happen? A hawkish polity or a hawkish Fed could slam out the anchors and do a Volcker and smash the economy to purge it of inflation. Zombie companies, ridiculous real estate prices, derivatives, a bubble stock market, and debt, and strip things back to the metal. And the second option would be, there's too much money printing, and that would break economic stability and break everything. Conversely, too little money printing or an austerity tightening in the Volcker style could break economic stability and break everything. A Goldilocks solution of monetary balance needs to be struck, a very tricky balance between too hot and not hot enough. Too much stimulus or active aggressive tightening causes everything to go haywire, and that uncertainty alone devalues all assets. So what the market said after Jay Powell spoke on the 15th of December is that we are going to get inflation, but not too much. And it's taken this speech as a solid statement against fighting inflation by crushing the froth that it is keeping it afloat against the wave of the COVID pandemic, all these different variants that we're seeing out there. In the old days, central banks used interest rates to heat up or cool down economies, but this is now obsolete. It is not the cost of money that is the key, it is the availability. The cost used to modify the supply and demand for money was adjusted by the rate of return on lending and the cost of borrowing. that linkage is gone because the lender will always make enough supply to be available for the demand, with the adjustment coming from what the lender, in this case the Federal Reserve, will accept as collateral. The more difficult the times, the crummier the collateral that will be accepted in exchange for a freight car of cash. The interest rate is not the value anymore of the availability of funds, is now decoupled. A lot of kind of complex things there, and it makes you really appreciate the simplicity of what the metals offer, by the way, especially gold here. Every dodgy developing country lives in this regime, and their problem is that they print and hand out the money to their cronies and either do it until the currency is destroyed or have an upper threshold they use as a ceiling for this operation. So the system is not new, nor is it novel for the developing world or the developed world. What the developed world is trying to do is keep it within the bounds of a stable economy, and that is about where we are now. Here in the United States, we have the dollar, which is the top reserve currency of all the ones measured against it in the IMF. And I believe we have much more leeway to do the things we're doing. In other words, modern monetary theory, many of us see it as kind of a smoke and mirrors thing. They can do it for so long because this is the top currency, the cleanest shirt in a basket full of dirty laundry. But it is still dirty, still needs to be cleaned. Something needs to be done for sure in order to get us back into a state of fiscal stability and monetary stability. The Fed has, in effect, set the upper bound for inflation. For now, that looks sustainable and therefore positive for gold and neutral for most stocks, and the horizon for that judgment is next Christmas into 2022. And so we must be patient here. We may see gold trade somewhat sideways in the next year because of the very thing I mentioned before, which was not in this article, is that the dollar is a much more powerful force than most people think. And everybody wants the dollar to succeed, at least everybody in the normal economy. You and I, we operate in a sense in an alternate kind of reality. By the way, the ultimate reality is precious metals, hard assets, things of true value. They also include certain preps, including land, and all these things that we value, that we hold dear to sustain our life. And part of that is obviously gold and silver, but especially gold in these times. It's really something else to think about and consider that this thing in and of itself cannot be manipulated. Gold is what it is and has been what it has been for millennia. That's not going to change. And notwithstanding what we've seen, the price action occur, it's really in a way kind of surprising that it has stayed this high considering what we've just talked about here. And we could see gold rise on a slow but sure ascend, and equities go sideways and perhaps down a little bit before entering a neutral channel for these equities. But gold will probably rise somewhat this year. And what has kept it, or in next year, into 2022, we will see probably gold take a slow rise. It won't be without its dips again, but I believe we'll probably see it be higher on an average this year than last year. And that's coming from the all-time high in 2020. It's interesting to note that palladium has rocketed while gold, silver, and platinum have ascended way less, and this signals that palladium, which is mainly an industrial precious metal rather than a hedge like gold or silver, that there's good economic times ahead, especially in the sector of high-tech and sustainable power. That's actually going to be quite good for silver. That's going to really be good for silver, and I believe that will probably mean that silver could climb this year too, and in a way that may narrow the ratio some, but gold may actually benefit from silver's rise to a degree too, which would be highly unusual. But we don't know exactly what's going to happen. I think sooner or later these variants, people are going to come to the grips that this thing is not leaving us. This COVID-19 is going to stay with us. And if the variants and the other variants that come after Omicron are weaker, well, then we basically have just another flu on our hands. and we're going to have to deal with it as such, and we're going to have to just press on, as we have pre-pandemic. Obviously, you take the necessary precautions and do the things that you feel comfortable doing to protect yourselves, just like you would with any other flu. And that's kind of what my prediction that's going to happen with the pandemic, but we'll see. Palladium, by the way, has certainly dropped tremendously. It has dropped tremendously since the beginning of last year. It is now lower than gold in the bid price and barely above gold in the ask price. So we have to keep in mind all those different scenarios here. Now, the other thing that this article does not talk about, which is crucial here to understand, is there are other alternative investments that people have been latching onto, mainly cryptocurrencies, and that is taken away from the gold space and the silver space somewhat. We have had things like the silver squeeze movement, which I think in some ways gold may have benefited to some extent from as well, but that was only for a brief period of time, and really a lot of that succeeded in a higher demand for silver, which helped to elevate premiums. And some of those premiums for gold were apparent as well too, mainly because of the inflation involved in the different sectors and different tiers of the premiums that were involved, such as fuel cost, the cost to rising wages and the like, and all other kinds of different factors that play into parts with premiums. But nonetheless, the outlook for 2022, I believe, is fair for gold. Not necessarily great or good, but I'm going to probably eventually give my prediction of gold into 2022. But when I do that, and that will definitely come in 2022, it is going to be a semi-educated guess. In other words, there's so much complexity in the markets, it really is just a guess, but I'm going to base it off of what my understanding of the markets are, so I feel like I have somewhat of a pulse on the markets. I'm going to do the same thing for silver as well, but I think gold will be very interesting to see where it falls by this time next year in 2022. So the outlook, I believe, I agree with the overall sentiment of the author of this piece, that I think we're going to see it slowly rise. On an average, it will probably be higher somewhat next year than it was this year, but maybe not as much as people had thought it was going to rise this year. In other words, it's a much more tepid response to where we're thinking things are going to go with gold and silver, because really, honestly, folks, I know this pains from many of you to hear this, but the dollar is king, and it's not going to go down without a fight for multiple different reasons. What Henry Kissinger did in 1973, a lot of people don't talk about, but tying it to the petrodollar as the petrodollar, in other words, all the oil from the Middle East and transactions of energy tied and Western transactions being made with the dollar, has really set it up to be the world's reserve currency. Even though it doesn't matter as much these days, the remnants of what Kissinger did is profound and will continue to have profound consequences in the years to come, up until the currencies are reset. The central bank digital currency, or what's happening with the Great Reset, which I think they're going to plan and continue to set the infrastructure in place for that. But they're going to take their time, because they know they don't need to do anything soon. And even with inflation going the way it's going, I don't believe we're going to see a hyperinflationary scenario in 2022. I believe they know just enough what they can do with the smoke and mirrors to keep the dollar afloat without causing that much harm. And we also are getting late news here that the Build Back Better plan has been killed, at least for this year, by Joe Manchin, which is a very good thing. All of that spending and setting us up to $30+ trillion. We know we're going there anyway. And they haven't even fully spent the money from the last couple of packages. And they're basically, the Congress is approving this stuff before, and they don't even have time to spend it all. It's crazy. So we'll just keep pressing on the best thing we can do as the outlook for 2022 is to be cautious in your buying, understand what you're buying, but to accumulate. I believe it's wise to continue to stack gold and silver into 2022, but I believe you should do it in a smart and intelligent way. I talk about that multiple times, and especially this year, especially with rising premiums. There's ways to do it intelligently and to where you can best preserve your wealth, because that's what these metals are here for. They are not investments. So there you have it. Let me know what your thoughts are in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.